Welcome to Money Mode, the channel that makes money talk less confusing and way more useful. Let's get into it. Every single year, without fail, the same headline returns. The United States national debt has hit a new record high. It happens so often that most people simply scroll past it. But why does this story repeat every year, and what does it actually mean for anyone watching from the outside? Let's start with the basics. Public debt is the total amount a government owes after years of spending more money than it collects. The United States runs what is called a fiscal deficit almost every year, meaning spending consistently outpaces tax revenue. To cover that gap, the government issues bonds, borrowing from investors, banks, pension funds, and other countries, with a promise to repay later plus interest. That interest is where the real story begins. As total debt grows larger, the cost of simply maintaining it grows too. Interest payments alone now consume one of the largest shares of the federal budget, competing directly with spending on infrastructure, defense, and social programs. This is exactly why debt ceiling negotiations return to the headlines almost every single year. Lawmakers must agree to raise the legal borrowing limit, or risk the government being unable to pay its existing obligations on time. There is another layer to this story that rarely makes the headlines. Because the United States dollar remains the world's primary reserve currency, global demand for U.S. government bonds stays remarkably strong, even as the total debt grows larger year after year. Central banks, pension funds, and institutions around the world continue buying these bonds because they are considered one of the safest assets on the planet. This unique position allows the government to keep borrowing at relatively low cost, something most other countries simply cannot do at the same scale. It is one of the key reasons the debt conversation repeats endlessly without triggering the kind of crisis some headlines suggest. So should this worry the average person? Here is where mindset matters more than the headline itself. Consider the Nordic approach to money. Populations across Denmark, Norway, and Sweden consistently rank among the most financially literate in the world. Their core principle is long-term stability and self-reliance. Instead of reacting to every alarming headline, they build personal financial cushions that can withstand years of uncertainty. A rising national debt figure does not change their daily discipline because their security comes from their own balance sheet, not from predicting government policy. Now look towards Singapore, a place known for sharp, systematic financial planning. The mindset there centers on proactive asset growth and structured retirement planning. Instead of asking whether debt numbers are frightening, the question becomes practical. How do I keep building assets steadily, regardless of what the broader economy is doing this year? Debt cycles come and go, but a disciplined accumulation plan continues quietly in the background. Then there is the American mindset itself, the birthplace of high-risk, high-return thinking. Even though average financial literacy scores in the United States are not the highest in the world, the appetite for entrepreneurship and bold investing is unmatched. This is the mindset that treats uncertainty not as a threat, but as opportunity. Financial freedom becomes the goal, and calculated risk becomes the tool to get there, even while the national debt clock keeps climbing in the background. Entrepreneurs launch companies during recessions, investors buy assets during downturns, built on the belief that volatility is simply the price of admission for outsized reward. This is not recklessness. It is a deliberate philosophy that separates fear of the headline from action toward a goal. Put these three mindsets together, and a clearer picture emerges. National debt rising every year is not a prediction of personal financial doom. It is simply the ongoing operating reality of a government financing enormous spending through borrowed money. What actually determines financial outcomes is not the size of a country's debt, but the size of an individual's discipline. Long-term stability from the Nordic model. Proactive planning from Singapore. Bold, calculated risk from the American spirit. Combine these, and the annual debt headline becomes background noise instead of a source of panic. This is why the story returns every year, and why it always will. Governments will keep borrowing, ceilings will keep being negotiated, and headlines will keep repeating. The only variable that changes the outcome for you is the mindset you choose to build your own financial future around. This video is for educational purposes only and does not constitute financial or investment advice. Always do your own research before making financial decisions.